Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, a pep talk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. Now, I know a lot of people are scared right now, and a lot of people are checking, their portfolio trackers every few minutes. And who among us doesn't do that, right, from time to time? But I also would like to remind people that the journey, this market cycle to these higher valuations that we're ultimately hoping for, was never going to be an easy journey. And we've also outlined the case for the idea of lengthening cycles. There's no reason we have to go parabolic this year. I also want to draw people's attention to the fact that, it's easy to miss the forest for the trees. Just go back and look. I mean, obviously, we know the price of Bitcoin today is 54K. A year ago, it was $17,000. Even if you go back today, I mean, if you go back to, say, September, the September drop, we bottomed at around 39K. Back in July, we bottomed at 29K, right? So we had a 29K here, 29K Bitcoin. That was seen as extreme FUD back then. Here it was 39K, okay? So we had 29K, 39K. Look, I mean, obviously people are saying, all right, do we have to go back to 49K? I don't know, right? I don't know. I don't have a crystal ball. What I do know is we can look at areas where we might have some potential support and then draw the conclusions based on based on what happens. Okay. So remember, to maintain the integrity of the bull market, we just want to make sure we hold the 20-week moving average on the weekly time frame. Okay. No one, and I mean no one, is going to get out of bed for a wick. Okay. So we don't get out of bed for wicks. We don't care about that. So what is the 20-week estimate? Well, remember, the 20-week estimate today is already above $50,000, right? It's at 50.6K, so we still have a lot of wiggle room. Now, fortunately for us, there is a chance that we don't go there, okay? I mean, I don't think we have to go there, but we also do know that any time historically that we've gone below the 8-week moving average, well, maybe not every single time, we've always come to either the bull market support band or with at least a few percent of it, okay? Namely, the time I'm mainly thinking that we only came a few percent away from it was back over here. But historically, again, getting below the 8-week moving average means we test that bull market support band, okay? We've seen that many, many times in the past. Right now, above the 21-week EMA, we're only about 3%. So again, it's basically the same distance we were at when we came close to it back over here. It was about a 3-4% difference, okay? So there's the bull market support band, which gives us wiggle room because, again, it ranges from 50.6K up to 52.5K. So we have wiggle room, right? We have a lot of wiggle room there. Even if we were to drop another $2,000 or $3,000, we're still theoretically in business as long as we don't put weekly closes below the bull market support band. Again, a wick is fine, right? A wick is fine. I mean, even if we were to go to 49K, and then continue that trend of 29K, 39K. If this is 49K, even if that happens, it could just be a wick like this one was, right? I mean, it could just simply be some wick or something, and then we get a nice bounce, okay? So 29K, 39K, let's see if this ends up being 49K or if we can actually hold the line here. You might wonder, well, what are the chances we hold the line here? It's interesting if you sort of break this down on the daily time frame. It does sort of tell a certain story. The 100-day moving average, you could argue, is where we actually held the line back over here. Okay. Now, what's interesting though is that the daily close on this side actually closed below the 100-day, but we held the 20-week SMA as support right there. Before we actually held the 100-day SMA as support, and ultimately this led to the market moving back up. Okay, so hopefully that little kind of butchered that smiley face there, but hopefully that smiley face improves your day a little bit. But anyway, so you can see the 100-day, the 20-week SMA. There was some confluence at that area. We ended up bouncing, and we put in a higher low, right? A higher low. What's interesting today, let me remove this stuff so we can actually see this a bit more clearly. We're actually at that same level on that uptrend channel. But again, this is on a logarithmic scale, and we don't actually have the same confluence that we had back then. Okay, so back over here, the 100-day and the 20-week SMA sort of came together, provided a lot of support. Today, the 100-day is at that uptrend on the logarithmic scale, but the 20-week is all the way down here at at like 50K, 50.6K. So they're not actually at the same level. The 100-day moving average currently is at 54K, 54.1K. So we are above the 100-day moving average at the time that I'm recording this video. We have had some moves below it though, as you guys have seen on some of these wicks and whatnot on the hourly time frame. So we have gone below it here. You can see we've been flirting with that 100-day moving average. But the confluence with the 20-week is not there at this moment, because back over here there was confluence, back over here there is not. Okay, so that basically begs the question, well, are we going to hold support at the 100-day, which you could argue is where we held our support over here, and bounce at this point, or are we going to go back down to the 20-week and then hopefully bounce, right? So that's what we're sort of looking at here. That's what I'm looking for. And you might say, well, does that break the potential uptrend channel? Like, can we look at that and say it's broken that uptrend channel? If it comes back down here, yeah, I mean, that trend it would. But again, you switch it over to the linear time frame, it tells a slightly different story. Again, I don't have a crystal ball. I'm just telling you what I'm looking at, and we could draw it like this and say, well, if you draw it on a linear time frame, that uptrend channel is basically riding that 20-week moving average. Okay, so that would be where I would be looking for in the event that 53K does not hold as support. It still doesn't mean we have to get super worried. We still have the 20-week SMA, which could ultimately come and hold the line. Remember, in order for the Bitcoin bulls to sort of claim victory on another move, another push back up to the upside, we'd like to hold the line if we get back down to it. Okay, if we go below the 20-week SMA, first of all, it only matters if there's weekly closes, okay? And even then, if we get back above it the next week, like we did in 2013, we're still in business, okay? What you really don't want to see, you don't want to see a weekly close. You don't want to see a weekly open below the 20-week and a weekly close below the 20-week. That looks pretty bad, and historically, when that happens, you do get a lot of follow through, okay? Like we saw back in May. Remember, if we go back and look at what happened in May, once we had a weekly, well, this one was below the 20-week SMA. We had a weekly open below it, but this was actually preceded by a weekly close, right? A weekly close below it, a weekly open, and we actually just kept going down. And then we did not see any V-shaped recovery. And I said back then, we're probably not going to see a V-shaped recovery. We need some type of systematic lull in the market to regroup, to slowly move higher, to build out some support at some of the levels that we basically had previously just blasted through, right? And we just blasted through those levels on the way up. Why not try to reclaim them as support on the way down, and then build out a base from there? Okay, so when I look at the chart, I know a lot of people are still scared, and it certainly is easy to get scared when the price of Bitcoin is just sort of bleeding seemingly day after day after day. That's basically what has happened back over here. There was a lot of fear at 29K. A lot of people were super worried. Same thing, right? Same type of sentiment. Over here at 39K, there was a lot of fear, right? A lot of fear back then. We're seeing something similarly play out today. Right now we're at 54. What I would be looking for in the event that if the 100-day moving average does not hold, which there's a chance that it could, right? I mean, I don't. It's not like I need to see a test of the 100-day moving average or a test of the 20-week to be happy. But if we do fall below, we still have the bull market support band. We're not below that yet. So what it shows you is how quickly sentiment in crypto can change. Even though Bitcoin has experienced a 20% drop, we're still above the average price of Bitcoin for the last 20 weeks, right? So it shows you, just how steady this uptrend has been for the average price of Bitcoin over the last 20 weekly closes to still be below the current prices, even though we're still over 20% down from the prior all-time high of $69,000, okay? So, sometimes you have to dig deep. I don't have a crystal ball. If we do go below the 20-week SMA, I think the key area to look out for would be 40K. Okay, I mean, 40K is where we held the line last time. If we drop below that, then, at that point, you could argue there's something systematically changing in the structure of the market if we go below 40K. Historically, once we hold the line at the bull market support band, we've never gone below those levels, right? If you go back and look, holding the line typically means we don't go back, right? I mean, we don't go back to those levels after we held the line. Even the last time we held it over here, we ended up staying right above that in the bear market bottom. So I think that, 40K could be revisited at some point, but I would prefer, if it has to be revisited, I would prefer for it to be revisited after we put in a market cycle peak. And again, there's no guarantee that we have to revisit it. If we hold the line at, say, 50K, like imagine we have some type of scenario like this play out where we go to 50K and then we get another push up, then I would argue that the next bear market bottom is likely above $50,000. So there are some advantages of holding support at the 20-week moving average, because then historically what it's meant is we don't go below those levels ever again. Okay, I mean, again, I don't know that you're going to be able to take that to the bank and cash it in, but it is something we've noticed in the past. That, look, holding the line, while it's scary at the time and it never feels like we're going to hold it, it typically does build out macro level support that we historically have not gone below, right? So, I look at the market today. I know a lot of people are fearful and whatnot, but look, I mean, we've also talked about this whole lengthening cycle theory for the last several years, right? Last several years, we've been discussing lengthening cycle theory, the evidence for it, and I've put out the thesis that I thought made sense. I thought makes the most amount of sense, and that's basically that, look, there's no reason we have to put in a market cycle peak in 2021. In fact, one could argue, right? Someone I feel like could argue that perhaps some of the selling pressure right now could be from people who think that this is the market cycle peak, or who are trying to front run the market cycle peak because they think that it has to go down in 2022. On the contrary, I would argue that 2021 has been an accumulation year. I said this weeks ago. There's no reason we have to have a parabolic end to Q4, but what I see when I look at this chart is a long accumulation year. Now, make no mistake about it, this was a distribution phase back over here in the early part of the year, but I told you guys that back then that I thought we were too far extended, we needed a summer lull. But even then, this is sort of like a local top. You could still argue that if lengthening cycle theory does ultimately play out, then one could still say that while this was a local top and a theoretical distribution phase, if you wanted to take advantage of this quick move to the upside and then reaccumulation down here, you could still look at this on the macro scale as just a year-long accumulation phase, right? You could still look at it like that. And the thesis that we put out before was that, look, there's no reason we have to have a market cycle peak here. If I actually change this so it just shows it up to the peak, that's what it looks like, right? So that's what we're sort of looking at. And my argument all along has been, look, guys, I know a lot of people are expecting a market cycle peak to come in December. There are a lot of people that thought it was going to come in September. There are a lot of people that said it was going to be back in April. We've had a lot of scary times, right? April, we had the summer drop. We got through it. September, we had the September pullback. We got through it, right? We said, look, guys, September is usually not a good month for Bitcoin. In fact, it usually drops on average about 6%. And there is some recency bias to it, but now we've had 5 years in a row where September has been a bad month for Bitcoin. And so I look at it and say, look, guys, it looks like a lengthened cycle, right? It just looks like a lengthened cycle. And I hope that by like looking at this type of analysis, it can, and if it ultimately does pan out, then we'll look back and say, yeah, like was just a long accumulation phase. To give you guys an idea, I don't think we have to have a market cycle peak next month. I've said that a long time. Look, time between peak 1 and peak 2, an extra 474 days. Time between peak 2 and peak 3, an extra 335 days. Technically, this market cycle has lengthened already, well, let's not say technically, by over a week, by about 9 days. But the reason it's unofficial is because we have not put in a new all-time high. We put in a new all-time high at 69K, but that's sort of right on line with where the last market cycle peaked at least in terms of days since the market cycle bottom. So as I said before, there could be some people selling just because they think this market cycle is over. It's lasted as long as the last one did. If you bought Bitcoin at $4,000, you're still getting away with pretty good return, even if it goes to 150K or something. Okay. But I look at this and say, there's still a good chance we have a ways to go here. We could have several hundred more days to go before we're looking at a potential market cycle peak. And I don't think that, there's any reason that this has to be the market cycle peak at 69K. So look, I've said all along, I thought we needed to get below the last market cycle. Again, if you go look at this on a linear scale, one of the things I notice when I look at this is, look at the final blow off top, right? It was a final blow off top. This one too, diminished returns. This one too, diminished returns. Everything we've experienced for Bitcoin so far, this market cycle, can be summed up in this little squiggly line that you can barely make out off of the x-axis. So what I'm looking for is perhaps a bit more squiggles down here, but then eventually I'd like to see, some type of rally up. I don't know how high it'll go. I mean, I don't think we're gonna go as high as some people are calling for. But even then, I mean, even if you got some type of rally like that, it would still be in line with the idea that, look, we still get that final blow off top, but we do have diminishing returns and we have lengthened cycles, right? So that's sort of the idea behind the theory. I know lengthening cycles and diminishing returns has not been a popular theory by a lot of people for a long time, but I have to present what I see in the charts, not what I want to happen. Believe me, I mean, I would prefer Bitcoin just be at $300,000 today, or I would have preferred for the guys that were predicting 300K in September. I would have loved for them to be right? I mean, I don't mind being wrong. As I've said before, I'd rather be rich than right? I'd rather be rich than right. If you want to give me a 300K Bitcoin a few months ago, it's fine with me. If you want to give me a 300K Bitcoin next month, that's fine with me. But I have to go with the data, right? I have to go with what the math says, and what it says to me is that it's going to be a long cycle. There's going to be these phases where we go down for a while. It's natural in a lengthened cycle. You're going to have periods where you don't always go up, but eventually we'll make it to $100,000. I've been pretty adamant about that all along. Okay, I do think Bitcoin will make it above 100K this market cycle, but I don't think it has to be this year. I know a lot of people, that doesn't really make a whole lot of sense because they think that 2022 is just going to be a bad year. And then we just gear up for an accumulation year in 2023, and then we go back up in 2024, 2025. But I'm telling you now that it does not have to play out like that. And a lot of times, if you think about it, 2014 and 2018, they were bad years for sure, right? And so a lot of people think, okay, well, 2022 has to be a bad year as well. Look, they could be right. At the same time, 2021 hasn't been that spectacular of a year for Bitcoin. I mean, if we're being completely honest. And we have to be honest here, okay? Bitcoin started the year, at 28, 29K. We're not even up 2x at this point since Bitcoin started the year. You can see it started right over here at around 20, it was below 30K. I mean, if we go look at, say, whatever the daily close was, so you guys know I'm not blowing smoke here, and let's go to, say, December 31st, the close was at 28,980. So let's just say 29K. A 2x from 29K would be 58K. We're not even at 58K, so we're not even up 2x in 2021. In 2017, we would have been up about 20x by the end of the year. Okay, so it was a completely different cycle. There's a lot of differences in this cycle than the last cycle, and I don't think people should be fooled in thinking that they're the exact same thing just by cherry picking some arbitrary reference point and saying that they have to be the same thing. Look, at the end of the day, from a fundamental perspective, it makes sense that the cycle's lengthened. It makes sense that returns diminish. What more is there to say, right? Don't miss the forest for the trees. The price of Bitcoin last year was $17,000 on this day. Okay, on this day. The price today is 54K. Imagine if you told the guys back then that in a year, the price of Bitcoin would be $54,000 and everyone's starting to be acting like it's like the end of the world. Okay, they would have laughed at you. Your former self would have probably laughed at you. Well, maybe your former self would have been pretty upset with it only being $54,000 if you thought that it should have been $300,000 at this point. But remember, I still think time is on our side. I still think we're technically in an uptrend. We still have the 100-day that we're trying to hold on to support. If we don't, we have the 20-week SMA, the 21-week EMA. That's where we held the line last time, back in September. Okay, that's where we held the line. Let's see if we can hold the line again. You go to the short-term bubble risk. Okay, if you go on over to the short-term bubble risk, you can see that we really didn't get that far extended from the 20-week SMA. just like in 2017 when we had those, systematic bounces off of it. So hopefully we can keep bouncing off of it for a while rather than going below and having to go through some type of another playing in the sandbox phase that no one really wants to go through at this point. But anyways, hopefully this video is informative. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. We do have the Black Friday sale on the premium list. You can find a link to that in the description below. We'll have that run just through the end of the month. Thank you guys for tuning in. Subscribe. I'll see you next time. Bye.